Hi everyone, Tim Ash from TTS Real Estate. Welcome to the TTS Weekly Recap, episode 10. This week, I'm proudly joined by our very own finance consultant, Luke Traficante. He takes care of a lot of the loans for our clients, and he's taken a bit of time out of his day to discuss interest rates. It's a topical question. It's one that gets brought up on a regular basis as to what people should do. So I wanted to introduce you to an expert, and we'll ask him a couple of questions and we'll get well underway. So maybe first, Luke, you could start by telling us the service you provide when it comes to people applying for a loan or refinancing.
Yeah, sure. Thanks for having me, Tim.
No problem.
Essentially, when a client comes to us, to keep it really high level, we would like to inspect and essentially perform a preliminary assessment on their current financial position. Once we've done that, we can then start negotiating with lenders to see where they best fit. We can start looking at some better and competitive interest rates and see how we can save them some money. Our role means that we can assist the client with the paperwork throughout the transaction. We also deal with the assessment team and the people involved with the process.
Yeah, amazing. So that's really fantastic. I can say that with all honesty, if you're looking for the best service when it does come to a loan, Luke is your man. The next question I had, obviously, when the RBA puts interest rates up, how long does it usually take for the banks to then pass them on to clients? Is it kind of immediate? Does it then affect the packages that you offer clients?
So it does vary. From lender to lender, it does vary. Essentially, some lenders will pass the rate on same day as the rate rise.
Yeah.
Some might wait for a week.
Okay.
The general trend that we see is that the big four will start passing on first. So one of them will pass on usually the full rate, and the rest will follow. And that is followed by second tier lenders as well. So once the second tier lenders have upped theirs, that means we've pretty much seen everything in a rate rise. But that could be anything from the same day as the rate increase itself from the RBA announcement to about a week after. So it does sort of take a domino effect, to put it lightly. And essentially, once they do it, that'll apply to fixed rates across the board. It'll apply to variable, just everything. And I'll touch later on the fixed rates as well.
Yeah, amazing. So, I mean, in this current climate, when taking out a loan for someone, would you recommend that they fix it for a period of time or go variable?
So with fixed, essentially, once again, it's a bit more tricky because at the moment the market is volatile. It is volatile.
Yeah.
When there is a rate rise, fixed rates are generally the first to be up, even if it's just speculation based. Even if there isn't an actual rate rise, fixed rates will tend to go up, and they generally put that up maybe 1 to 2% higher than where the variable rates are at the moment.
Yeah.
So back when the first rate rise was announced back in April, some fixed rates you'd find were about 4 and 5%, whereas the variable rate was, I think it was 2.75 or so. That was the basic average we had at the time. It's difficult to say whether you'd like to lock it in. It's a big gamble. It's a big gamble.
Yeah.
Right now, if you decided to lock something in, you could be seeing a tip fixed rate of 6%. So whether the RBA will keep going as high as that with their variable rates, that's the big gamble you're taking.
Yeah.
Because at the end of the day, if you decided to refinance on a variable loan today, you'd be getting that lower rate. Whereas if you go to the fixed, you've got that higher rate from the get-go.
Yeah. Okay. Interesting and very informative. Thank you. And I suppose when it does come to borrowing capacity, what interest rate do the banks ensure you won't have an issue paying? There's a lot of commentary out there that people are under some mortgage stress. So, with the current rates at the moment, what sort of rate will they assess you on in order for you to get the money?
Yeah, certainly. So when we're applying for servicing and we do our calculations through a lender tool, essentially what we do is we input the rate the client will get. For instance, let's say that's a 4% rate at the moment. What they do is they apply a buffer rate, an assessment rate it's called, of about 3% on average.
Okay.
So they would basically look and go, all right, can we assess your repayments at 7% interest rate? If so, there usually isn't any problem.
Yeah,
So,
fantastic. Okay. And the question that's on everyone's mind, and this is just an opinion, are interest rates going to continue to go up from what you've seen?
So this is a tricky question. Always a tricky question to answer. Look, I think speculation now is that the RBA rates are tipped to rise next month. After that, we could see a period of potential plateauing. If the RBA was to rise after next month, I can't see them doing it 0.5 basis points each time. 50 basis points, because it would seem a bit too high. Generally, the rule of thumb is that you don't see the consequences of an interest rate rise until about after 6 months that it's happened. We are approaching that 6-month period, so anything's possible now.
Okay, yeah, no, that's very informative. Thank you so much. Well, that concludes this week's video. I really hope you've gotten some informative stuff from it. I know I have. I'll see you guys next week, and thank you so much for your time, Luke. His contact details will be in the description of the video. Should you have any questions regarding financing, refinancing, or applying for a loan, Luke is your man. I can guarantee you that. Thanks so much, guys. Have a lovely week.